The likes of Elon Musk, Jeff Bezos or Tim Cook have enough money to feed thousands, millions and even billions of lives out there. Yet, this is how much they pay in taxes and this is how much you pay instead. Let's take James. He is 6'5" and has blue eyes. James has been working in Wall Street for 5 years now and has an income of an average $100,000 yearly. He has always dreamt of getting a nice car on top of the apartment of his dreams overlooking Central Park, New York. But after a 30% tax, his take-home pay is only around $70,000 and that will be a long stretch before he can even come close to affording that. There is, however, a loophole: the $1 CEO Club. This club is only reserved for the wealthiest individuals, with members such as Elon Musk, Steve Jobs and even Mark Zuckerberg. I'm sure all of us would want to be part of this exclusive club, and it is actually quite easy to qualify. All you need to have is a salary of $1 and below. Yes, you heard me right, a salary of $1. Now, some of you might be wondering, how can a CEO of Tesla and SpaceX, founder of Neuralink, OpenAI and the Boring Company, Elon Musk, be the richest man on earth if he only receives a $1 salary? Well, the answer is very simple. Instead of receiving a salary, he is compensated in stock options, and with his $1 salary and his stocks, he wouldn't have to pay any income tax at all. Instead, Elon will only be taxed via capital gains tax, which is at a rate of 15%, and that is only when he sells his stocks for profits. But I'm sure he wouldn't need to sell his stocks anytime soon, so long as he doesn't buy another Twitter. But that isn't all. Remember, they are rich for a reason, and they probably have a playbook on different creative loopholes that can help them to further reduce their taxes, like buying fine art, owning a sports team, or even creating a business overseas. Insert Messi, the highest paid Major League Soccer player in the world right now. He won the most recent FIFA World Cup and is the title record holder with 8 wins for the Ballon d'Or, the most prestigious and valuable football individual award in the world. With that, he earns a total of $20.4 million annually, and on top of that, he earns another $70 million in sponsorships and endorsements. Plenty. And so are his taxes. Although born in Argentina, Messi relocated to Spain for his football career when he was 13, making him a tax resident in that country. Spain is known for its high tax rates, and over there, corporation tax is at 25%, while personal income tax can go as high as 47%. And with that, almost half of Messi's total income of $90.4 million will be cut for taxes. This means that Messi pays more tax than an average American earns annually. Well, he's not gonna pay that much.
The FC Barcelona forward and his father Jorge Messi were convicted of hiding 4.1 million euros of income.
Messi and his father are accused of using tax havens to conceal earnings.
Between 2007 and 2009, Messi and his father created a shell company called Mega Star Enterprises to avoid paying 4.2 million euros or $4.6 million in taxes. Lionel Messi is arguably one of the most known sports players out there, with brands and companies lining up to work with him. His image alone is worth millions, and instead of directly pocketing the endorsement fees, he had his image rights transferred to the shell company so that his sky-high endorsement fees were all paid to Mega Star Enterprises in Uruguay. It is one of the many infamous tax havens in the world. Other countries, including the Bahamas, Luxembourg, and most famously Cayman Islands. These places are well known to have lower tax rates and a more economically stable environment, a literal heaven for all taxpayers. Messi being an expat in Uruguay, and this gives him a special tax advantage, which is a tax holiday of 11 years. Essentially, a break from taxes given by the government. This allows him to pay as low as 0 tax on the profits earned. This meant also a whopping 47% tax down to 0%. Down to 0%, can you believe that? But what about Spain? Since Messi is still a tax resident there, so he still needs to pay tax over there, right? Well, a double taxation treaty exists between Spain and Uruguay. Hence, individuals or companies are not taxed twice on the same income. So there you go, a free pass for him. he won't be taxed twice for his endorsement income. And the rich and wealthy individuals aren't the only ones that can exploit this loophole. Businesses such as Apple, Amazon, Nike, etc. also use similar loopholes to reduce corporation tax. Back in 2013, Apple was reported to have avoided almost $40 billion in taxes by creating 2 more subsidiaries in Ireland, another famous tax haven. You see, Apple Inc. is incorporated in the United States of America, which has a corporation tax of 21%. The global tech giant makes revenues from their electronic products like the famous iPhone, iPad, Apple Watch, and so on. Their total sales can go up to $380 billion a year, and their foreign sales itself have accounted for more than half of their total sales. So again, since the goal is to avoid being taxed, Apple then incorporated 2 subsidiaries, the Apple Sales International (ASI) and also Apple Operations International (AOI) in Ireland. And just like Messi, who moved his image rights to the mega star enterprises, Apple moved all of their operations over to Ireland. The subsidiaries are responsible for the sales of Apple products and hold the rights to Apple's intellectual property outside of the US, which includes their trademark and also their patent for innovations like the Apple logo, iPad, iPhone, etc. And now, instead of going straight to Apple Inc., the foreign sales and profits all go to ASI in Ireland, which charges only 12.5% corporation tax. Compared to what the US charges, that's a big drop of 8.5%. But why stop there? That's still not enough, because the tax can be reduced even further to less than 5% or as little as 0.005%. And here's where the loophole comes in. According to the Irish tax rules, a company will be deemed as a tax resident if it is centrally managed and controlled in Ireland only. So, to avoid being taxed in Ireland, Apple can just say that both the Irish subsidiaries are managed and controlled over in the US, because all the board meetings were held in the US and most board members were based there as well. And being incorporated in Ireland, all the profits offshore are not remitted back to the US. Therefore, they will not be subjected to US taxes either. Essentially, you can consider Apple as stateless for tax purposes. And for years and years, Apple exploited this tax loophole. But then came the EU crackdown on Apple's tax arrangements with Ireland. It led to significant legal battles that are still ongoing right now. And following this entire fiasco, the US has also made some changes to its tax rules. Firstly, through the Tax Cut and Jobs Act, they imposed a one-time tax on accumulated profits of foreign subsidiaries, regardless of whether these profits were remitted back to the US or not. And secondly, they introduced global intangible low tax income, which aim to tax foreign income at a reduced rate, making sure that some tax is paid on the profits that are kept overseas. So through these moves, the US can ensure that at least they tax some of the big corporations. I mean, it's better than nothing, right? However, that poses the question, why do big corporations still want to avoid taxes despite earning millions and billions of dollars every single year? It's very simple. Even an increase of a few percent of the company's bottom line will send a very positive message to the shareholders, which will then increase its share price and thereby increase its entire company's market capitalization. Benefiting who? The CEO themselves, who are compensated by stocks. And don't forget, a salaryman like us will also be getting a piece of the pie when the profits are good, through bonuses. But when we look at it from a bigger picture, the government collects fewer taxes from big companies, and therefore less goes to infrastructures like building or maintaining roads, airports, and cheaper healthcare. In the end, we as taxpayers are paying the price.